All right, happy Friday, party people. All right, couple of things here before I start talking about what's going on in the markets. Please help me help veterans who serve this country. They've done enough. It's time for us to serve them. That's why it's my focus personally. Twice today, two different times, and not to the fault of the other loan officer, but twice today, I've seen different people who are working with other lenders for VA loans. They're getting ripped off, and pisses me off. So rates are really, really good for VA right now, and shouldn't be veterans should not be paying any fees to get a mortgage loan. They do not need to pay any fees to the lender to get a loan to buy a home or to refinance. And it's happening. It's prominent. It's all over the place. So if you can help me help a veteran do that, they don't have to call me. They can't call me. That's great. If they want to call me, they can call anyone at Align Mortgage, and we all have access to the same thing. If you want to have them call me or text me, that's great. But let's make sure that we're protecting the veterans who serve this country. I just want to get some buy-in from people who are following me here that this is something that we should all be doing. We all agree that this is something that makes sense. There's a lot of companies trying to take advantage, and frankly, it pisses me off. So that said, happy Friday. You like my haircut? Did it myself. All right. One thing I learned about doing my haircut is that my hair is going away. So let's take a look at things. First of all, stock market today. This was a really interesting day. It was going to be super telltale. I was expecting the market to be really, really high today. I think they needed a big number because the narrative right now is that everything's going to be okay. There's a potential, Gilead has a potential cure for coronavirus, and that should solve all of our problems, which is obviously completely false. But if you'll see here, this was at the point in the day, it was right here where I was saying, okay, this is going to really tell us what's up, because this formation and everything that's taken place this week, we should see the market go much lower. And we did. We got 100 points. So if you're trading that move, you definitely made your money. But then at the end of the day, we see this. Now, what I decided to do today, which I normally don't do, but at least on this video, was look at the long term. This is the 1 month of the Dow Jones. So you can see the trend here higher. Now, the last month has been probably the most devastating month economically in the history of our country. Most devastating. History. Unemployment numbers, the economy is put on hold. Pretty much everything. Fortunately, not the world that I work in specifically, but the vast majority of the economy is put on complete and total hold, a halt, which we've never seen before, unprecedented. And Goldman Sachs came out and said some things, and there's different people who are prognosticating some bad things with earning reports and stuff like that. And we've seen a little bit of that, not a ton yet, but it's coming. And yet we're running away on a Friday, running away higher for the last month. We're running away higher in stocks. Is this realistic? What in the world is going on? What's happening here? If you don't believe this stuff is fixed, hopefully you do and understand that it is now. Now, this isn't a bad thing. This is a good thing for most people, as long as you're not getting caught in the trap. The trap is to try to suck people back in and go, oh, it's going to go back to 30,000, so let's go buy heavy big right here. That is definitely not the thing to do. As I was saying on Wednesday, the market looked like it wanted to go higher, and that's exactly what it did. But I feel like it's a trap. I do. I feel like it's a trap. I think we have to be careful here. If you're re-entering the market or entering the market for the first time, I think it's a very scary point to do that. We'll see what happens next week. Who knows? But there's no good economic news coming anytime soon. So I don't get this at all. And I just want to caution you to be careful. Mortgage rates are great. The Fed knows what they're doing finally. After they blew out everybody here, we've seen really, really steady move right here. Look at this little channel that they're staying in. And we're just getting these really small candles here every day. These are daily candles, really small movement. This is great. That is absolutely awesome action. We're still struggling a little bit right here with high balance stuff, which is anything over 500, 10,400. Rates are higher. For a very long time, our interest rates with regard to VA loans were the same. Between conforming balance and high balance was the same. In fact, for a certain period of time, the high balance was better interest rates, which is weird. It is completely flip-flopped. The low balance stuff is where the better rates are. Get into the twos for sure. Obviously, no lender fees to the line mortgage, but the same thing with the conventional loans and conforming loans. You're seeing the high balance rates, they're very difficult. So when I talk to someone who knows the most that I know of, he basically just said there isn't an appetite there, meaning that people, the investors, have less of an appetite for the higher balance stuff. Now, why would that be the case? Well, it's not as diversified. Think about it this way. If you were going to invest in a mortgage as an investor, which is essentially a bond, you're buying a piece of paper and it's supposed to pay you a certain return. Would you want to buy one bond for $1 million, or would you rather have two bonds for $500,000? And in a situation in which the market is still trying to figure out how much foreclosure activity to price in, the investor is saying, I'd rather have two at $500,000 because then at least I have a chance if one of them forecloses, I still got half of my investment. Whereas if I buy the one bond for $1 million, I'm oversimplifying this, but it's for conceptual reasons. You can see why there's less of an appetite for the bigger loan amount units, because it doesn't allow you to diversify your risk as much across your total investment. So we're seeing these higher balance loans. I mean, jumbo, conforming jumbo has been fine. QM jumbo has been fine, but the non-QM jumbo has really been troublesome. The QM jumbo is its own little niche, and certain places where you can get that are really, really good. But the non-QM jumbo has pretty much disappeared. It's gotten very, very ugly. Very ugly. Super qualified people for credit reasons and income reasons, but who are non-QM for some other reason, a random foreclosure or something that they were somehow attached to or whatever it was in the past. Those people are really kind of getting screwed by this. So that is the most basic way for me to explain why the high balance or the higher loan amount stuff, there's less of an appetite for it, because we're not sure what will the foreclosure activity be based around the things that are happening in the economy. But if you just look at the stock market, you'd think everything is great, because you could look at it. This is today's action, which we gapped up. So we gapped up, I think 500 or 600 points here. And then, we kind of came back to reality a little bit. But then it was like, no, it's so great. It's so great. Oh, okay, maybe it's not even there. And that's how we finished it. The market looks light to me. It looks like it wants to keep going higher. When I watch the market action, I get a feel for whether it looks like a light, as if it were a balloon with helium in it, like it just wants to go up, or if it looks heavy, like there's something that's just weighing it down. You can kind of see that. This market acts super duper light. But if you believe that there is this pent up roar ready to come, and that the market's going to go up 5,000 or 6,000 points any minute, today would have been the day. Today would have been the day for that to happen. And it kind of did, but it didn't really. And so I expect that we're going to come to reality here at some point. The rule in Wall Street always is buy the rumor, sell the news. So we saw the market going up on the short week before Good Friday, before Easter last week. We saw the market really going up every single day. It was kind of like, what is going on? That was the rumor. The rumor was probably out that Gilead was really close to this, and the information got released this week. So usually you see buy the rumor, sell the news. But the news came out and it didn't get sold. So I really don't know what to think. Are we entering uncharted territory as far as this information superhighway is concerned? I don't know. It's very, very interesting. But I do like the macro elements in real estate right now are still really, really strong. We're seeing a tremendous amount of activity from the standpoint of listings that are available, multiple offers. Some houses I've started to notice are sitting. There's a few houses, listings here and there that are starting to sit. And so what I'm trying to do is and for my real estate friends out there, people who are in the industry, I'm going to really start posting a lot of information. I'm going to be curious to get your feedback on finding comp bombs. Now, a few people have sent me listings that are listed way lower than what they think that the previous comps were. And they kind of said to me, look, the market's going down. Hold on. People list stuff lower all the time as a strategy to try to get multiple offers and drive the price up. So I don't see that as a sign of weakness at all. What I want to see is a comp bomb. And let me just clearly define comp bomb here as being a comparable sale that is a bomb on that neighborhood or that particular unit type or floor plan or whatever. I want to see a sale that is way lower than the previous comp. That's a comp bomb. So if you've seen any comp bombs, please send them to me. I want to know where the comp bombs are going off in San Diego County. If they are going off, no one sent me any yet. There was a few in 18. I was bearish in 17 and 18 because I thought there was this underlying just hush hush, everyone's sick of how expensive homes are. But what's been really, really interesting is that there's still, I still have a lot of buyers who are buying in the, $500,000 to $600,000 range, and they're getting really nice houses. So I don't know. It's a strange market. There's a lot of data out there. I've been doing some cool stuff here that we're going to be bringing to you soon. Jay Lee has sent me a ton of amazing information. He and I are going to get this to you as soon as possible. Incredible statistics on the marketplace and what's going on. I've seen Gary Kemp post stuff that is statistically oriented. I've seen other smart individuals post stuff that's statistically oriented. And what we're seeing is that the activity and the thirst, the demand for real estate is still extremely high. I don't anticipate that slowing down. I just don't think there's enough time here in the bad zone for that to really slow down. But I also, the more I see things that don't make sense, like what's going on in the stock market, the more that I get worried. But this is the most encouraging thing that we could possibly see, which is the activity in the mortgage bond market right now, which is very slow and controlled, very slow and controlled, right in this channel, right here. We're just going to keep the tap it in. The Fed is Happy Gilmore, and they're just tapping in these 3% mortgage rates, especially on the VA side. You can get sub 3%. Conventionals, I quote conventional yesterday, 3.375 with good credit. So there's good opportunities. However, credit scores are going to become more and more and more important. We saw that Chase, I think it was this week, maybe it was last week. I think it was this week. Chase said we're not doing anything under 700 anymore. You're going to start to see that happen because we're already in a risk-based pricing environment, which means that pricing, aka the interest rate, is going to be associated specifically with your individualized risk. It used to be back in the day. I'm going to date myself here. 20 years ago, if you qualify for a VA loan, everyone had the same rate. There was a VA rate, and if you qualified, you got it. Didn't matter. If you're 600, 800, didn't matter. That changed, and this has been changed for a while, but now it's very risk-based. So the tiers can change the rates from 780 to 740 to 700 out to 720 to 700 to 680 to 660. In those different tiers, you can get different rates or different pricing. Sometimes the rate's the same, but the pricing's a little different. We're going to see that become more and more prevalent across the board, not just in the mortgage industry, but in all forms of lending, as the actuaries are trying to figure out how does this economic change, the shift in what's happened in the economy, how is this going to affect people's ability to repay? And it's going to take them a while. They're going to have to get some data. They're going to have to see some ugly things happen in order to get it. But they're going to start to really affect these things. You're already starting to see some of the preemptive strikes, if you will, as some programs have gone away, some programs have gotten tighter. We are still 600 minimum credit score for FHA and VA with no lender fees. So Align Mortgage is sort of a unicorn in that space. But for the most part, you're seeing things tighten up. You're seeing people make shifts. You're seeing things get more credit score driven. And I think that's going to continue to be the trend as we just figure out where we're at right now. We're kind of in outer space. We're in the middle of the ocean. We can't see land in any direction. And we're all trying to figure out what is this thing going to look like. No one knows. All I know is this. The stock market's too high. But that's about it. And real estate demand is strong. I expect that to continue. To reiterate my important message today is let's all make sure that we're doing our best to help serve veterans. Okay, they're not just a statistic or a unit that goes into your annual spreadsheet. These are people who serve the country. These are people who have an entitlement that they deserve to be able to use and effectively use in the most efficient way possible. We owe it to them to make sure that they are getting the best possible deal when they buy a home, plain and simple, or refinance a home. So let's make sure that we're doing everything that we can to help those folks who deserve it so much. Hey guys, let's have, I think I'm going to do some videos this weekend, but let's have a great weekend this weekend. Let's do our best, spend time with our families, smile as much as we can, have fun, dance around, play some music, enjoy this life while we're here on this earth. Talk to y'all soon.